Do you think this action in December, and I mean the back half of December, is this abnormal, or do you buy the argument that some have made this week that it's actually the last 9 years that have been abnormal, and this is what stocks are about? This is the price of admission for the yield that you get over time.
Carl, I hear that, and I always say to myself, well, in 1987, I heard that it was the price of admission for what happened from when I got in 81 to 87. And, it turned out to be just a great buying opportunity. It just happened so quickly. I don't like to look at the market as, well, it's been, we've had, it's like 7 lean years, 7 bad years. It's not the true year, it's not the Bible. What it is that a lot of stocks have come down. There's a lot of ETFs that have made it so it's very difficult to get a handle on things on the fly. But when you look at individual stocks, which I know, and there's a great Scott Black interview yesterday, individual stocks are so hard to even consider these days. But there are a lot of them that you would say, wow, how did that get down there? And that's what I'm looking for.
I'm so glad you brought up the Scott Black interview. He joined us on Closing Bell, longtime value investor, Warren Buffett disciple of Delphi. And, we talked, Jim, about the valuations. He was citing PE levels for all sorts of stocks, semiconductors, I mean, you name it, being so cheap. And yet he said he's not buying anything. Just listen to this clip.
You should be very cautious on this market until it stabilizes. It's like an earthquake. The initial one may be 7.8, but there are aftershocks, and it's better to wait, and be cautious because the aftershocks could still be disruptive. I think the general market move dominates everything. I could say, honestly, 95% of my companies came in with record earnings in the third quarter. It doesn't matter. Even if you own 9 multiples or 10 multiple stocks, they all went down systematically.
Jim, his key was he wanted to see resolution on trade. He wanted to see that world trade is growing again and that we can make some sort of deal, like you said, with China. And if there's optimism there, I think he would change his mind.
Yes, Sarah, that's why I thought that was a key interview, because what he did was say, okay, look, right now it doesn't matter, but here's something that could happen. When I think about a man like Peter Navarro, a man like Lighthizer, they don't want to throw the economy into recession, and they actually believe the economy is strong enough to withstand 2 rate hikes. Not that they want that. They certainly don't want that, provided we get a trade deal. And I think that the economy, I mean, look, you're an observer of the dollar. It's entirely possible, Sarah, the dollar might be topping. You're an observer of these little tea leaves that the Chinese put out. They don't do anything idly. It's the Communist Party. I think there's movement on trade. I think we'll look back and say, why did we bottom? We bottomed because there was movement on trade. We didn't realize it. Scott's right. Look, we all want to be perfect in our diamond. But you know what? A lot of people just have to say, I'm willing to buy that second trembler or third trembler because I can't time it as well as Scott. And what I'm saying is that yes, there's a lot more risk than we've had because it's so volatile. But there's so much reward. I mean, buy something. Just buy something. Don't buy a lot. But recognize that if we go down today, it may be another chance. I don't buy up openings, and Carl knows that. Yesterday was great. I said down 2-3%, let's buy. Today, if it's up, let's just take a pass. Let's take a pass.
Jim, on the shutdown, I mean, we went into the shutdown reminding viewers that stocks have traded up through shutdowns in the recent past. Today, the president threatens to close the southern border entirely unless he gets his wall funding. I mean, you want to get a recession, that would be one way to start it. Well,
he does. There's no doubt about that. Gigantic trading partner. Some things come out and they're a little intemperate, and you kind of hope that there's a bit of a hyperbole. And I think there's some hyperbole to what he wants to do. I don't want to lose sight of the track of when I look at some of the stocks that have come down, like the semiconductor. There are some areas in technology that were so decimated that now you're starting to think, can I get back that price I had Monday? Is there any way I can get that Monday price? And I don't know if you're going to get it again.
Jim, in fact, looking at some of the individual names, just looking on a week-to-day basis, what has been some of the top performers: Salesforce, PayPal, Adobe, MasterCard, Facebook, Illumina. So you kind of had people reach for these kind of old established growth favorites. Not a lot has changed fundamentally. Is that something where you feel like it's just great company at a better price, or is that going to be the character of this market going into next year, growth again?
Great question, because what I think happened is that those were the ones that actually did have they're very oriented toward e-commerce, omni-channel. You need them in order to make the omni-channel work. It turns out it was an omni-channel Christmas. We've seen some mall store numbers that were not great. Omni-channel was terrific, so people went back to the fundamentals. those are rich stocks. And I've been saying to people, pick one, because too many people picked an ETF that was diversified among 10 companies to do exactly the same thing. I'm hoping that 2019 be the year that we out the ETF people, that we literally, even on air, we just say, okay, look, these are not for individuals. These are for traders. Distinguished products that people think and brokers are using as being diversification, that we all know and everybody on air knows that are just for traders. Let's mark these things. Let's sticker them. Let's make them like Juul, Juul, not Jewel.
Finally, Jim, we should remind viewers, you were using the words bear market to describe the action way ahead of Gunlack. 4, 5, 6 weeks ago. Where are you right now on the prospect of recession? And by that, I don't mean necessarily GDP recession, but earnings recession. Goldman calls it a liquidity recession, something that really does show a reversal of fortune.
Liquidity recession for Goldman. They claim they have more liquidity than everybody. Okay, so I like Goldman just because it's just everyone's given up on it and decided that it's just a bunch of brigands and squid players or something. Look, I think there's no recession. I think this is more of 2011 oversold, where you're dealing with the October-November period where finally Italy, the ECB get involved. We realize, wow, not so bad. We pull back to 19 and then we rally. I think that we're having a slowdown. I think that's what the data shows. I have a list of things. Everything from linerboard to electric usage to paper to polyethylene to ethylene to all sorts of just freight data, to car loadings, to the actual spot prices of trucks. All the stuff that Powell has to start using instead of like these models that these guys came up with. We all skipped those classes because we realized they were irrelevant, and he's found himself in them at his age. He should be a little bit more circumspect. But I do believe that we're okay. It's just we're not as good as it was. To get a trade deal, then there is some reason to think, you know what, why didn't I pull the trigger on the 40 on Emerson? We also, if we get a trade deal, by the way, I think oil goes back up, and I think oil has been the best tell of where things are going.